Hey, let's get into the trades I'm looking for going into tomorrow. But real quick before I do that, today was a record for me. I think one time before I had gotten over $1,000 of profits, and right now I'm just trading one micro contract for it. But I know it's been a long time since I've been there, and it's been a long time since I've actually consistently have been profitable, which I have been recently. So let me just show you here real quick that I'm pretty proud of for today. So now the goal is not to get a big head, take stupid trade, to do that kind of stuff. Let's see here. Let's scroll down right here. I just took a snapshot of my account right here. So see over here, balances, USD 14,000, just under 15K. Currently, I'm down to 177 open trades. But here's the thing today, right here. Profit and loss, $1,267. So obviously that will come down just a little bit with the trade commissions taken out of it. But there was a couple of the trades I talked about yesterday going into today that I was looking for that went and hit, and it was just things worked out great. And there's actually some open trades going into tomorrow that I'm still open that hopefully will go up or down depending on which way I have it, and hit those. So I mean today everything just hit. One of the reasons why this is doing like this is because look at this. If I zoom out a little bit here, this is the S&P 500 market right here. These blue lines are just signified to me trades. The market is pretty much has just been churning. It's not in any type of trend, because let's zoom out pretty big. If you look right here, pretty much going all the way back here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days, maybe even 11. That was kind of an uptrend that stopped over here. But about the last 10 days, it's just been a sideways pattern right here. So these trade setups work best in a sideways pattern, and that's especially true for the ones I'll go over today, which is just the regular pitchfork trade. The shift pitchfork works best when there are extreme movements and prices going in a direction, because it's a reversal trade, so we wait for that big move one way, and then we get in for it and look for it to go the other way eventually. So with that said, let's go over here. Let's talk about the trades that we are currently looking at going into tomorrow. So the one we're looking at right now for the S&P 500, it's just the pitchfork trade right here. There's points 1, 2, low, low 3, high, high 4, right up there. Let me mark it here real quick with this one just to highlight it for myself. So what we're looking for right here, and this may not stay as point C if no, it will stay as point C. Never mind. It will stay at point C. I forget. So it will stay at point C no matter what. It's confirmed right there, or point 4. So what we're waiting for the S&P 500 right here for this thing to go down, close somewhere down in here, and hold on, let me put a circle. Close somewhere down in here. I mean, it's not going to happen at 7:10 p.m. It more likely happen at when the market opens, which wouldn't be until right about 8:30ish, right there. Let's put where's the vertical line on? I don't have the vertical line saved right there. So anyways, we'll just draw this rectangle box. So somewhere like over right here, that's 8:55 a.m. So, somewhere like right here is where we'd be looking forward to close. I mean, it can happen. The overnight session is just that. I always look forward. That's where the big movement happens when the market opens, 8:30 a.m. my time. But yeah, so that's the main trade set up. I'm looking forward going into tomorrow. So I am looking for downside here in the S&P 500 market. Now, if the market just continues instead of goes down to there, and the market goes up some more over here, then we'd be looking at the shift pitchfork trade, which is that, and that. And all it is just an ABCD pattern right here. That's 5 wave. I had an ABCD pattern. I think this is it. That's correction. Oh, that's the correction. I don't know. What did I do with it? I used to have it. Hold on. Let me find it here real quick. I know I have it. Yeah. What did I do? Oh, it's this one. Oh, okay. So it's just this one, A, B, C, and then D, wherever it's going to end up. And then we look for price closing above the blue. Wherever it's going to close, that's a signal to get in, and then we do the Fibonacci extension levels for if there's going to be a retracement for it. But going to SP 500, this is the main trade setup I'm looking at going into tomorrow. If we zoom out, let's look at the red semaphore, see if there's anything going on. There is actually a trade going on with the red semaphore, so let me delete these here real quick. So going here, see we have semaphore right here, 1, 2, higher high 3, lower low 4, and so we'll put the pitchfork on it right here. 1, 2, 3. So let's see, do we have any? Okay, so we do have a current trade. Let's see what it's looking at. This is a trade we actually can get in right now, because here we have that trade. Let's just make sure the Fibonacci's are correct, because actually I made a mistake earlier today. I got the Fibonacci's on the wrong level, so it showed an incorrect trade setup where price closed, I believe, above the green line, but actually it didn't once I corrected them on it, so I had to take it out for a small loss on that one. But that's unfortunately the way it goes sometimes. So there we go right there. And so here is the 5th point. This one would have been the red. It looks like this one was going to come out. Did not. You know what? This trade is said and done. This is actually one I traded today, but I'll just show what it looks like right here. So 1, 2, 3, and 4, because we traded it right over here. But this is no one that just opened up right here for it. So let's see. So we have, let's zoom in a little bit more, see what it looks like right here. So let's see which one. There's the one that closes right there. Since it's not making a higher high right there, let's see if the 23.6, yeah, the 23.6 has already been hit. So I mean the exit is right here for that trade right there. So missed that one, but if we were looking at it, you know, 11.25, probably I would have gotten out probably like right about there. So probably about a 9-point winner right there. But anyways, that trade is said and done. So yeah, tomorrow for SP 500, let's put this back on here real quick. 1, 2, 3. Looking for a short down into here. Russell 2000. This was a long-term trade that I was in. It got slightly in profit today, and I just decided to get out of it because I was tired of waiting on it for it to come down right down here. It would be a nice gain, but I wanted to do more day trading stuff rather than waiting for this longer swing trade for it. So for that one, we still have that up in trade. We still are looking for a short move in the Russell 2000 down the way down here to 2000, about 2090-ish right there. So another, what percentage is that? You know, 5.5, 5.6 something percent, 125 points here in the Russells. Just waiting for that to happen. There is a long setup in this one right here. So this trade setup is using, what's the name of this pitchfork? Inside pitchfork right here. How the inside pitchfork works is you have points 1, points 2, and then within points 1 and 2, you have points 3 and 4. So there's 3, there's 4. Let's put, I believe it's this one I use for it. Yeah, this is it. 2, 3, 4. So we put the inside pitchfork on here. The levels for that one are the kind of teal lines 1.5, and then the red line is, or I guess kind of reddish, is 5. And how it works is similar to the pitchfork trade. Is we wait for either way for price to break out once it is set, either to the bottom side or the upside. This time we broke out to the upside. So the original exit is the kind of pinkish reddish line up here, but when it usually comes back and hits the Fibonacci levels, that is when we look for to get in. Now this is the one trade out of the 3 that I take that I'm not 100% sure if this is one I want to be aggressive with as far as the day trading goes, like the pitchfork trade, or if I'm going to wait until an extreme move happens, like the shift pitchfork trade for it. So this is one that's kind of like wait and see type of mode right here. But currently, so if we look at it, we have here it closed above it right here. So we'll go ahead. So that signals to look for the long. Right there, you know, for being aggressive, you can get in right when it closes, but we're looking for the retracement. So we have a new high, so we're still looking for retracement, new high, still looking for retracement, new high, new high, new high, new high, new high, and then finally we get retracing back down here. So this is where it is currently at. So price hit the 23.6. Once it did that, the exit is up here at the 1.146 right there, bottom of that line. And then when price came down here at the 50%, that purple line right there, then we move the exit is going to be to where the close of the high is right there. So there's the close of the high move right there. So with this, within this move right here, there's just another about 8.2 points there in the Russell 2000 trade. I'm not getting in this trade just because, like I said, it's one that I'm just waiting on and seeing if there is any big moves that happen through it, like the shift pitchfork, the regular pitchfork, Andrew's pitchfork trade. I'm confident that it's a day trading device where if you don't get out that day, then the next day it'll come back and fill you. But the shift pitchfork, those are where I'm looking for the big moves when those happen for that. It's for the Dow Jones right here. This is this is a pitchfork trade right here. So I'm in 5 micro contracts. Have my exit just above the hard exit right there. There's kind of like the lows. There's the no, I'm sorry. You know what? Let's back up here real quick. Okay, start over. So points, 0, higher high there, lower low, and then higher high there. So 0, 1, 2, 3, or 1, 2, 3, 4, however you want to count it. So price came down, closed below it, and then we had a retracement candle, so that signifies we're doing the Fibonacci retracements in there. Let's take off the previous day highs and lows. That's getting in the way. So hit the 23.6, exit right here, 1.146, hit the 50, exit the low right there. But then what happened is price went up, hit the 1.46 the other way. So when that happens, price, the exit moves to the 23.6 and then stays there and does not move. So the top of the green box is where the exit is. And you see my exit is slightly above that. I always have my exit slightly above the hard exit right there. And now it's just waffling around, just collecting contracts and everything like that. You can see I actually have another limit order just above the 1.44, because what I've seen for this move, now that I say this and I had this great day, you know, it'll turn out that sometimes the Andrews pitchfork can have extreme moves going the other way. But the most I've seen it is come up to like, you know, probably about like this area, top of that green box, and then it gets reversed the other way. So I'll have another order. In fact, I can just even make it a little bit higher right there. For that, since and we'll just leave it right there for that one, and then we'll just leave the exit right there. That's what we're looking for here in the Dow Jones. So we have a really nice short setup for the Dow Jones. Where I think all my exits, I didn't get in down here. I got in all on this big candle right here got me in. So I had one at 23.6, one at the 50, one just below the 88.6 level, and then another one right here. And then I'll have another one right there. So that's what we're looking for. Dow Jones, we have a nice short setup going into tomorrow. And if it does go a little bit higher, I'll be looking to get in another contract to short it. Oil, we are in a long setup. And what we had here was what I mentioned yesterday. I was looking for a little bit of a higher high. So that got this morning when I got from my computer was at 7:20. 7:20 a.m. I decided to just get out right there. It came really close to hitting the 1.146 extension level for it, and that's a trade we're looking for, because when price came back and hit the 23.6 right here, this is X we're looking for. But it miraculously did not go up there and hit it. And I was just saying, I was thinking, like, you know, when market opens, it's probably going to push up and hit it, but I just wanted to go ahead and get out now, just lock in the profit for it. It was fine. But then price looked like it was going to, created a double top or even little triple top right here. And then we had just a big sell-off here in oil all the way from 72.4, where is it? Come on. 72.43 down to 69, about 69.88 for it. So, you know, over $2.5 move, 2.55, 3.5% for that. And so I had another order weighing down here. So I got filled right there at the 23.6. So the exit is just below that, and I just put my exit just kind of like where all this junk is right up here. So there's going to be a lot of orders to get filled as price moves up through there. So tomorrow, I'm looking for price in oil from this trade setup. Come on, arrow, to go up there and hit that one. It didn't hit it today from that move, but tomorrow looking for a follow through, going up to 72.75. Go up there and hit that, and be done with it. If it doesn't, and price reverses back down, I have a buy limit order waiting right here. Not sure if I'll get in at the 88.6 level if, you know, the market just craters in oil down to 66.95. But if it definitely goes down to 65.50, I'll have an order rating down here. But that would be a heck of a move. But it could happen. I mean, look what happened just the other day. And one thing I do want to show here is a lot of time when the markets, unless it's going to be a blowout day, what we have is this is just a simple previous days extension level. So the extension levels, if you measure the previous day's low and high, if you go into the next day, these target zones, the 1.146 to 1.44 levels, that's traditionally where the market stops, or at least it slows down. Now, you can have blowout days where the market just zooms up through there. Yes, those do happen, but those are the rarity. Most of the time what you have when price gets close to it, or more regularly price goes into it, we see price stop, and then, you know, the rest of the day, depending on what time it hit it, we'll just see it bouncing around some, or it stops and hit it, and then you get to retrace it back to it. So that's typically most of the time what happens. But then, like I said, there are days like when you have a blowout trade, like look at, I'm going to delete one, I don't need both these on there. like when you had this day right here, actually there's the previous day for it. Here, price hit the extension high zone right there. Look what it had to the bottom side at the extension low down here. So using the previous day's highs and lows, look, that went into the extension low day. Looked like it was going to be a blowout day going into it, but then at 4:10 a.m. for whatever reason, that was the low. Just past the extension low of the day, popped back up, used as support, and then just springboard off starting at 8:20 a.m. Went through the extension high of the day, came back, used it as a springboard. It was looking like it was going to be an extreme blowout day, but we had it come back to it. But then that used as support, and then became extreme move day when it closed relatively higher than it right there. So that's kind of a good example for a day of what extension highs and lows look like. So yeah, so that's what we're looking for oil tomorrow. I'm looking for more upside coming up and finishing it at 72.25. So if that does happen, it would be another potential bullish day if it stays up there at about 2.5% move here in oil. Last but not least, Nasdaq. Great day in the market for Nasdaq, and we have another really nice trade setup for it. Here is going to be the exit top of the box, which is the 23.6%, because here we have the 1, 2, low 3, high 4 right there. So this one I really had to look at several times to make sure I was looking at it correctly, because this one was a little bit tricky. But I am confident this is the right read on it. But if price skyrockets way up over here, it just blows it out, then obviously it's not the right read, but this is what I think is the right read for it. So as we can see, let's get off previous day's highs and lows. So what happens is when price is closing below it, because here we have again 1, 2, low 3, high 4. Price closed below it right here on this candle. Let me just highlight that here real quick. Oops. That's ugly. There we go. Close below it. So then what we look for retracement is we look for price cannot make a new low going down. It has to make a retracement up with close of candle, hit the 23.6, and then therefore we are good to go. So with it, there's the close below it, so they were in it, lower low. Now this is what was tricking me up. I had a triple and quadruple check myself. It made a new low, but it did come up and hit the 23.6 and the 50. But according to the rules how to trade, for retracement to happen, the price cannot make a lower low. So we have a lower low here, and lower low here. So finally, here's the candle that we can do the Fibonacci levels on. So hit the 23.6, hit the 50, and then we have the next candle, did not make a lower low. So there we go, it's locked in. So there's a 50. So the exit would have been down here, but then price going up 88%. Then hit the 1 point. You see I had another one right here at the 1.146. So when I hit that, that's when price moves down to the 23.6 line, top of the green box right here. And then it went all the way to 1.146. And now it had just been waffling around ever since. So going into tomorrow, what I'm looking for with the Dow Jones is, the Nasdaq is weakness into it, coming down here to around, let's see where price currently is, was at 19,875. So less than a percentage point move. So, for that to happen, not a big deal at all there in the Nasdaq market. For that, go down there and hit for it, and then just have to see what happens with other subs and everything like that. But I do think that is going to be that's going to be a target for tomorrow to look for in the Nasdaq market. And then after that, we'll just have to see what's going on here in the markets. And this day compared to this past day right here is just an inside day. So it looks like the Nasdaq, we do have a move down here in the market now, especially when this day happened. And then this day wasn't a big day. This next day for this downward move to kind of be over, we needed this day right here, or even tomorrow's day, to go up higher and especially break these highs right here. But since it hasn't, this is setting it up for a Let's see here. So something like, probably like that. And this is not exact science drawing these trend lines right here, but there we go. Something like that looks to be somewhat accurate for it. So wouldn't be surprised tomorrow, you know, assuming these are the kind of trend lines. Trend lines are very subjective, but that's how I draw them. I draw them if it's going down, I draw them first on the bottom side, drag it up to the top. If it's if it's going up, I draw it on the top side and then drag it down to the bottom. So if, you know, these are two true trend lines right here, then would be surprised for price to go up here, somewhere around here, maybe even just to the line. But anyway, somewhere maybe up here, hit that, and then we have the retracing back down going into tomorrow. You know, assuming this, I mean, looks like a pretty good trend channel right here. You know, we have that point, there's that point hit off right there. So, you know, somewhere just around in that area for it. May go up there and hit the red line and come back as well. But yep, so that's what we're good for in Nasdaq. So just to recap, Nasdaq, I'm looking for weakness in the market down to this level, down to, what is that, 19,875.50. Oil, looking for strength in oil tomorrow, going up to 72.76. Dow Jones, looking for weakness in the Dow Jones, going down to, what is that? I'll draw this over somewhere, to about 42,340. And what would that be for it? Oh, half a percentage point, no big deal. Then for the long term, for the Russell, or more intermediate long, we're looking for weakness come down all the way down here. But then for this kind of short term setup right here, we're looking for a little bit more positivity to come up and hit that right up there, 2,226. And last but not least, for the SP 500, nothing right now, but if price does close below down right here, then we'll look for a short setup. All right, thanks everyone. Take care. Bye.